14 days, more than 100 trades, and guess what? I lost more than I made. And here's what I learned in a hard way. Hi everyone, welcome to my channel. I'm Iverson, and today I want to share something very real. How I failed my first funding pips challenge in just 14 days. If you have ever thought about taking a prop firm challenge, this video will help you avoid the same mistake I made. I will also share my biggest win, my biggest loss, and also what I'm doing differently next time. First, let me explain what funding pit is. It is a prop firm where traders can get funded if they pass a challenge. The challenge have two main rules. The first one, 8% profit target to pass. Second, maximum daily loss 5% or maximum overall loss 10%. It sounds simple, right? But trust me, emotion can make it very hard. So, how did I fail? In just 14 days, I completely blew my account. Here's why. I took up to 20 trades in a single day. Yes, 20.
Oh my god!
I wasn't patient. I couldn't wait for my perfect setup. I was overconfident after a few small wins. And worst of all, I forced trade when the market was slow. Basically, I broke my own discipline. Now, let me show you this chart. This was my biggest win. If you are looking at the chart, this is very beautiful uptrend momentum. So, as you can see here, we create higher high, higher low, higher high, higher low. So, by this means, we can expect the price will continue to move upwards. And these are the sitting liquidity that waiting to be swept. So this 15 minutes demand zone is where the price have to hold in order to maintain the upward momentum. So I have set my alert over here. And once the price hit my point of interest, here is where I put my buy limit, and stop loss is all the way below our demand zone, because just in case it will come down and sweep the available liquidity that's sitting below this area. But this is quite strong demand zone, which I expect it will not come down here. And somehow this, we also call it as protected low. Why? Because if we are looking at the left, let me zoom in slightly bigger to show you. This candle previously has swept the available liquidity on the left. So this is why this is considered a protected low. And here's why I put my stop loss just right below the liquidity candle. And I'm targeting 3.4R, which is good enough because my minimum risk to reward is 3. So from here, I enter the trade and I target sitting liquidity, as we can see over here. Of course, if we want to target until here, it shouldn't be an issue at all. But to be safe, because market can do whatever they want, so I just set my TP at the last swing high. Why am I targeting there is because this is the extreme supply zone, but I don't want to hold until there. So I take these trades, which took me about 2 hours to hit my TP. So as you can predict, after this beautiful win, I felt amazing. And after this, that confidence led me to my biggest mistake. Let's jump into the chart. I will show you how stupid am I on doing this mistake. As you can see, in 5-minute time frame, this is the last swing low. I highlighted my 5-minute order block, and this is also the previous minor break of structure that moved the markets to the upside. So this 5 minutes order block to me is a very strong area, and the moment in 1 minute, we have fractal market shift happen over here. I immediately enter to the trade and I aim all the way to the previous swing high. But you know what? Here, this is the first sign that telling me this order block may not work, because in order for this order block to work, it have to touch maybe around here, maybe half of the order block or on top of the order block and go up. In this order block, it went all the way down. It already blast through our order block. I shouldn't be taking this trade. And another thing that I have to be aware next time is we have to also count this as our last minor break of structure. If I mark this correctly, you can see here we already have our fractal market shift happen, which telling us this market will going down. But I overconfident after the biggest win in gold, I thought myself like I have unlocked this cheat code. But you can literally see my thought process, how I forced the trade even though the setup wasn't clean. You can see here, it's consolidating. It's consolidating around here and then it break out, This is a sign where you see your bullish candle, the black candle, you see it's slowing down. And at this moment, bearish candle already take over the market. It's very clear, right? But a loss is a loss. To me, nothing to blame, but this is where I have to improve. So what did I learn? Number one, less is more. I don't need 20 trades. I'm now limiting myself to 3 quality trades a day. Number two, patience is everything. If the market is slow, I will wait or skip the day. Like for example, Monday, Tuesday, the price usually will be very choppy and there's a lot of fake out and so on. So I now will not be taking any trades during Monday and Tuesday. Number three, confidence is good, but overconfidence kills. Stick to the plan. Moving on to align with what I have learned, my next funding pip challenge will be different. Here's my new rule book. 3 trades max per day, 1% risk per trade. Minimum risk to reward is still remaining 1:3. Trade only during active session. London and New York overlap. No trades when I feel tired or emotional. And lastly, I will journal every single trade. So if you want me to share my full trading journal setup, let me know in the comments. If you are also doing a prop firm challenge, comment below and tell me your experience. Did you pass? Feel like me? What was your biggest lesson? I will be documenting my next challenge, so subscribe if you want to follow my journey and hopefully see me pass the next one.